Good morning, everybody. Welcome back to Trades and Gains. Strap in, folks. Earnings season is here again, which means the stock market is playing its favorite game, hot potato with billionaire companies. Today's lineup, the Trade Desk, SoundHound, Block, Pinterest, and Atlassian, or as I like to call them, the digital ad kid, the talking robot, the Bitcoin bartender, the craft board, and the project manager that charges you monthly. Now, to kick things off with the Trade Desk, here's the headline. The Trade Desk delivered $694 million in revenue, up 19% year over year. Earnings came in at 41 cents a share non-GAAP, beating Wall Street's 39-cent estimates. Customer retention still over 95% for 11 straight years. By all measures, this is a solid quarter. They're crushing it in connected TV, expanding retail media, and their AI platform, Kokai, is integrating more first-party data than your phone after you say vacation near it. They even gave Q3 guidance of at least $717 million in revenue, which is a flex in a soft ad market. So naturally, the stock fell 38% in one day, because apparently in 2025, good is just Wall Street's safe word for sell everything and throw the baby out with the bathwater. Why? Analysts said ad tech is getting crowded, and Google's still the elephant in the room, or rather, the elephant owning the room in this case, selling ads to the room and tracking everyone inside it. But make no mistake, the Trade Desk has a moat, and unlike Meta, the moat isn't full of your private DMs right now. The next company we're going to talk about is SoundHound.
You were asking about the Trade Desk's business model and how it differs.
So for SoundHound, they crushed Q2 revenue, $42.7 million versus $32.9 million. That's a 30% beat, the kind of beat that makes analysts reach for their inhalers. Their CEO, Keyvan Mohar, says businesses and consumers are warming up to AI voice agents. Translation, we went from press 0 for a human to Alexa, break up with my boyfriend in under a decade. The vision here is voice AI is everywhere. Cars, restaurants, call centers. Moar literally pitched this as even your local taco shop should have AI answering calls. Otherwise, you're just losing money. They're even tying their automotive voice software into restaurant ordering systems. So your car can literally order you a burrito before you arrive. We've gone full Jetsons, people. The stock jumped 14% after hours on this news, but losses doubled year over year to $74.7 million. So yeah, they're growing, but profitability is still in we'll get back to you territory, aka IOU territory. Now, the next company we're going to talk about is Block. They had a hell of an earnings. Bitcoin, now let's talk cash flow here. Jack Dorsey's payment empire just raised its 2025 gross profit forecast from $9.96 billion to $10.17 billion. Why? Because Cash App profits grew 16% and Square profits grew 11%. People are still swiping, tapping, and peer-to-peering like rent isn't due next week. Bitcoin revenue fell from $2.6 billion to $2.14 billion because crypto's still the world's most volatile loyalty program. But the real flex, $385 million in adjusted net income, up from $301 million this time last year. They even scored a seat at the S&P 500 Cool Kids table in July. Not bad for a company whose logo looks like a geometry quiz. Now let's talk about Pinterest, everybody's favorite inspiration board to find tattoos or whatever else you look for on there. Pinterest beat on revenue at $998 million versus $975 million expected, but they missed EPS by a penny at 33 cents. It's like showing up to prom with a gorgeous date and forgetting the corsage. User engagement is still strong, and the stock's up 34% this year, but their earnings beats are sporadic to say at best. 1 out of the last 4 quarters. They're great at getting eyeballs, but monetization's still tricky when your product is mostly wedding dress collages and taco recipes. Now, the final one we're going to go over is Atlassian. And with Atlassian, the project management giant behind Jira, Confluence, and making you forget half your passwords, posted 1.38 billion in revenue versus 1.36 billion expected. EPS came in at 98 cents versus 85 cents expected, a clean beat. But here's where things get a little murky, like two cousins kissing at your friend's wedding. Q3 revenue guidance came in light at 1.4 billion midpoint versus 1.41 billion expected. And in Wall Street's mind, that's like saying we might not be richer than expected. Sell, sell, sell. Operating margins are still negative at 2.1%, but that's up from negative 5.9% last year. Free cash flow margin dropped from 47% to 26%, still solid, just less obscene. And billings hit 1.5 billion. They're also boasting 2.3 million AI monthly active users, which means even Jira is getting in on the AI hype. Next up, AI that writes your TPS reports and apologizes for them. So what are the key takeaways here? TTD, fundamentally fine, but ad tech PTSD is very much real. SoundHound, AI voices are here to stay, so get used to it and upsell you guac. Block, strong profits, Bitcoin sideshow. Pinterest, solid growth, but monetization still a Pinterest board idea. And team, beating now, but guiding soft for later. And that's all we have for our earnings recap for today. I hope you guys are having a great morning, and I will see you in the next one. If you stayed this long, make sure you like, subscribe, comment, and share so you never miss another Trades and Gains earnings recap video. Have a great morning, everybody.